Welcome to Insightful Value, where we dig into undervalued and overlooked companies to bring you data-driven, no-jargon insights. Today, we're turning the spotlight on LVMH Moet Hennessy, Louis Vuitton, the global titan of luxury goods, and exploring what's behind the recent drop in its stock price. First off, this review is purely for informational and educational purposes. Nothing here is financial advice. LVMH is a powerhouse in the luxury space, with over 70 prestigious brands spanning fashion, jewelry, cosmetics, and wine and spirits. From Louis Vuitton and Christian Dior to Moet and Chandon and Tag Heuer, this company defines global luxury. It has long been viewed as a reliable compounder with wide economic moats, resilient margins, and a strong brand ecosystem that's almost impossible to replicate. From a value investing standpoint, LVMH has been an attractive but pricey stock for many years. The fundamentals are rock solid. Strong free cash flow, high return on capital, a diversified portfolio across regions and sectors, and consistent revenue growth. However, recent developments have shaken investor confidence. LVMH's latest quarterly earnings came in below expectations, particularly due to weaker sales growth in Asia, especially China, a market that has historically driven luxury demand. Economic uncertainty and consumer caution are impacting discretionary spending across several markets. Currency headwinds and slower recovery in U.S. luxury demand have also played a role. Revenue growth for the latest quarter slowed to low single digits year over year, which is far below the double-digit growth rates investors had grown accustomed to. Additionally, operating margins are beginning to feel some pressure, driven by rising costs and a highly competitive environment. That said, LVMH remains a juggernaut. Its ability to innovate while maintaining heritage appeal, its global scale, and control over its supply chain give it a strong position to weather short-term turbulence. For long-term value investors, this pullback could be an opportunity to grab a world-class company at a better valuation. The key is assessing whether the recent slowdown is cyclical or structural. At Insightful Value, we break down companies like LVMH using clear data and focused analysis. We look past the headlines to understand the underlying fundamentals, helping you find actionable insights whether you're new to investing or a seasoned pro. If you want more details on LVMH or want to explore other undervalued opportunities, visit InsightfulValue.com. And if you haven't already, join our free newsletter to get smarter about stocks and receive our ebook, The Checklist Value Investor, a smarter way to pick stocks. You'll find the link to the detailed company profile and newsletter registration in the description below.